Hello and welcome back to the Satoshi Society YouTube channel. My name is AJ, one of the co-hosts here, and today I'm going to bring you an update on the technical analysis, and I'm going to be talking about what is happening within the next 7 days as well. I know last week was a bit rubbish. I wasn't in my normal setup. I was on holiday, taking a small break, so it wasn't as normal. But we are going to be back to normal now. I am in my studio, so we are going to be back to normal. As I said, it's always nice to take a little break and step away from the charts for a while. But anyway, it's back to normal now, and I'm going to talk about what is happening within the charts within Bitcoin, Ethereum. I'm going to take a look at the DXY and traditional markets as well. And then we're going to talk about, as I said, what's happening within the next 7 days, because there are some things that are going to be happening, which are going to affect what happens within crypto and within the traditional markets as well. And I also want to go over sort of where we are in the sort of psychological, looking at the psychological side of things. So we're going to look at that as well. So jumping straight on into the charts, I just want to bring up, starting off with the Bitcoin charts. Let's bring that up here for you. Here we go. So taking a look at the Bitcoin chart, what we can see here is that we are within this ascending parallel channel. Okay, we tend to view these as bearish, and I've been saying for a while I'm expecting a pullback. However, the price has just been increasing. Sorry, I've got a bit of a sore throat at the moment. Give up. Yes. Let's carry on. So what we're looking at here is the price in this ascending parallel channel, and as I said, the price is continuing to go up, but we've still got these very, very bearish signs. Now, the reason why the price is continuing to go up is because we're breaking these resistance levels. We've broken all of these resistance levels that we have been looking at on this chart, and because we've done so, we have been moving to those next levels, and that's what I've been saying. Okay, I've been saying if we can break, I've been saying, we've got these bearish signs, yes, but if we do break above these resistance levels, then we are most likely going to go to the next resistance level. Okay, and that's what I'm going to continue to say. We still have these very, very bearish signs. Okay, coming and having a look at the 4 hour. Okay, we still got a big bearish divergence forming right here. Okay, price is ascending, as you can see here. We're forming higher highs, but then on the RSI, okay, we're forming lower lows. Okay, so a textbook bearish divergence once again. But we've seen this in the past. Okay, we've seen this in the past, and I've talked about this in the past, and said that we could see a pullback from here, but the price did not actually see that pullback, and what we got instead was a period of consolidation and then a slight continuation towards the upside. So what we can see here, this was another one I was talking about. We were forming higher highs on the price action charts, but on the RSI, lower lows, and the RSI was overextended like we are now. Okay, this is a sign that we're most likely going to have a pullback, but also we could have a period of consolidation as well, and that's exactly what happened. Instead of having the pullback, what did we see? Well, we saw a period of consolidation and then a slight continuation towards the upside. Okay, so at the moment, these bearish divergence tend to be forming a period of consolidation and then a continuation towards the upside. So we do just have to be very aware of that. But the majority of times when we see these bearish divergences, they do tend to play out, as in the price does pull back, but we're not seeing that at this moment in time, and that's why we've been using these horizontal levels. Okay, once these horizontal levels get broken towards the upside, like this one here, for example, at 21,468, okay, we use that as major resistance. Okay, it was a previous high from back here as well, all the way back on the 5th of November. Okay, we were using this as resistance, and then we broke above it. So what happened? Well, the price came up to the next major level, which was at 22,810. Okay, this is what I've been saying. If we're going to break one of these horizontal levels, we're most likely going to the next horizontal level. However, if we get rejected from a horizontal level, we're most likely going to see the price finally pull back. And I do still think the price needs to have that pullback to continue, if it wants to continue this push towards the upside. Okay, and if we're going to come and look at Bitcoin on the weekly, we can see that we're getting very close to the next major weekly level. Okay, so we've broken above, well, we've broken above this major level here after breaking it towards the downside. Okay, it was more looking at it now. It could be more of a fake out towards the downside. Okay, and we could actually continue to hold this in the future and continue this bullish momentum towards the upside. But we can see we've had so much upside that a pullback is necessary to, continue this push towards the upside. Okay, but that next level that we are looking at is between sort of $24,300 and $25,400 approximately. Okay, so this is the next major level, and we are very, very close to that level. Okay. This is also looking, very similar to something that I've shown in the past. I haven't shown it recently, but I've shown it in the past. I'm sure you are aware of it. The Wall Street cheat sheet, psychology of a market cycle. Okay, this is actually looking fairly similar to this right here. Okay, we go through these phases every single bull market and bear market. Okay, we see this all the time. Okay, and we've over the course of 2022, we've been in the anxiety, the denial, and the panic phase, the capitulation. Okay, and now we could argue that we've just exited the anger phase, or that we could actually have just been in the depression phase, and now we could be leading into that disbelief. Okay, we're somewhere between that anger and that disbelief stage. Okay, now for me, I still think that there's a high possibility that we could still be in this this anger phase here, or just leaving this anger phase, going into that depression phase, because I still believe that we could have another leg towards the downside. Okay, yes, we're having a really, really nice rally towards the upside. For me to be happy that this rally is going to continue, okay, we do actually need to break. Let's come back here. We do actually need to break sort of this $25,000 level, get up above this major level here, use that support, and continue towards the upside. If we can get above this and hold that, okay, then yes, I think that we could be in this stage here, okay, this disbelief stage, and then we can actually start talking about the bull market once again starting. Okay, but I still think, okay, there is a possibility that we are just leaving this anger phase, going into that depression phase. Reason being is because we do still have that that Fed interest rate decision, and as we know, if we come and look here, that is in 2 days, 9 hours. And looking at it here, it's looking very likely that we are going to get a 25 basis point rate hike. Now, this is good because the amounts that the Fed are increasing the rates by are decreasing. Okay, that is a good thing. And what we could see is once this decision is finalized, as in when the data comes out, we could see the price actually have a nice little pump towards the upside. However, it is still bad. Okay, they're still increasing the interest rates. Okay, they're still increasing them. Okay, they're still it's only by 25 basis points, but they're still initially increasing them, and this is still bad for the market. Okay, if they're going to continue to do this throughout Q1, Q2, Q3, Q4 of 2023, this is really not going to be good for the market. So we do just still have to be aware of that. Okay, the Fed are still increasing the rates. Okay, which is bad for the markets. Yes, they are increasing by a lower amount, which is good in the very short term. And this is what we tend to see. When we went from a 75 basis point, by increasing by a 75 basis point to a 50 basis point, okay, what happened? Well, the market pumped as that decision came out, okay, as the data came out. However, afterwards, okay, we did see a major crash. Okay, so we do still have to be aware of that, and that's what happened over the course of 2022. Okay, we saw the Fed release that data, okay, and the majority of the time when they decreased the amount that they were increasing by, okay, we saw a nice little pump, yes, but that is just silly money. Okay, it's just silly money thinking this is good. It's still bad because they're still increasing. Okay, so we just got to be aware of that. For me, I think if we're going to get this 25 basis point rate hike, which is looking very, very likely, then I think we're going to have a little pump coming into it. And then when the data comes out, we're going to have a little, small little pump. But then initially, I think the price is going to crash. So we still just have to be very, very aware of that. What else? We've got non-farm payrolls coming out as well on the 3rd of Feb. The Fed interest rate is on the 1st of Feb. And then we've got employment rate. That's going to be very, very important as well. So we're going to have to keep an eye out for this, and of course I will come live for this data as well. Major Fed decision, I'll probably come live for that as well. That'll be okay. But yeah, I will come live for this, and I will keep you updated with this, and we'll have a look at how the market reacts to this. But for me, we still could be, in this anger, just leaving this anger phase, going into that depression phase. There's still that recession looming. Okay, coming over here, bringing up this here, and let's bring this up as well. I've spoken about this for a long time now. If you've been following the channel, the 2-year yield, okay, which is 4.242%, has exceeded the 10-year yield, which is 3.551%. Okay, we come here every time this has happened. Okay, so every time this has happened, the orange line goes below the black line. That's when the 2-year exceeds the 10-year. Okay, every time this has happened, we've led into a recession, and the recession on this chart is shown by these gray boxes here. So every time the orange has gone below the black line into the minuses, as I said, that's when the 2-year exceeds the 10-year. And as you can see, every time that's happened, we've led into that recession. Okay, so a recession is looking very likely, and this is outdated. Okay, this is from 2018. So right now, the orange line will be below the black line here in the minuses, meaning that the 2-year has exceeded the 10-year. And we can very clearly see that, okay? The 10-year is 3.551, 2-year is 4.242%, okay? So the 2-year has exceeded the 10-year, which is not good. It is signaling that we are going to be falling into a recession. So that is also not very good for the market. Okay, yes, we having some nice price action towards the upside, but initially, okay, it's still looking very bearish. Okay, the fundamentals are still looking very bearish. Recession looming over our head. The Fed are still increasing the rates. Okay, they're not good. There are two things that are not good for the market, and as well, we need to have a look at the jobs as well. If we want to see the price of crypto push towards the upside, we want to see fewer jobs. Okay, however, there are still a lot of jobs out there in the US. That's what we're looking at, because that's what affects the market the most. But we do just have to be aware of that as well, and that's something that I'm going to keep a close eye on. 3rd of Feb. Okay, we've got that coming out. Non-farm payrolls and unemployment rates as well coming out. Okay, so we do just have to be aware of that. Previous was still 223 3K, which it was actually higher than forecasted, which is bad. We want to see fewer jobs for the price to actually increase. But yeah, for Bitcoin right now, we are just trading within this ascending parallel channel. Okay, trading opportunities I am going to be looking for. There have been a few trading opportunities here. Unfortunately, I was on holiday, taking a slight break, so I wasn't able to trade them. But just for some examples, what we're looking at here is the resistance. Okay, so we have the resistance of the parallel channel here. Okay, this was it could have been a nice trading opportunity here. What do we have? We have a bearish divergence coming in with a resistance, and then RSI oversold as well. Okay, that's a good indication to enter a shorts. Okay, so that would have been a really, really nice short down to support. Again here as well, still forming that bearish divergence, price action towards the upside. RSI, okay, is forming lower lows. The price was testing that resistance there, and RSI oversold as well. That was another good trading opportunity. And as you can see, that played out, and you would be looking to take profit at the support down here. Okay, vice versa. Okay, we could be looking for those long positions as well. Okay, so what we could actually view here is that right here we're seeing price increase. Looking at the wicks, okay, we're seeing the lower, we're seeing higher lows, okay, and then looking at the RSI, we're seeing lower lows on the RSI. Okay, so this is coming in confluence with some support here. Okay, those could have been long opportunities as well. So this is what I'm now going to be looking at. Okay, are we coming into any major levels? Well, right now, we are coming down into the support of the ascending parallel channel. Okay, we're also coming into a horizontal level as well, which is actually the previous high from all the way back here, which was the 13th of September. Okay, so we're coming into a horizontal level there as well. And what else are we looking at? Okay, we could actually be looking at the price forming a bullish divergence as well, maybe some sort of hidden bullish divergence. But yeah, we're seeing price is forming higher highs, okay, because we are within this ascending trend line right here. And then the RSI seems to be forming a lower low now, as you can see right there. So this could be a bullish divergence, which is potentially forming. And if that is the case, this could be a really, really good longing opportunity. And we could potentially long this all the way up to the resistance. However, if this does break towards the downside, we could see the price actually have this pullback that we've been expecting, potentially down to $21,468 at this horizontal level here. Because if we break this this parallel channel, ascending parallel channel towards the downside, it does actually give us a technical target of around $21,660, which is pretty close to that 21,468 horizontal level there. So I wouldn't be surprised if the price came and tested this horizontal level right there. Okay, so that's pretty much all I've got for you for Bitcoin. But we need to look at the DXY as well. Okay, the DXY is going to help us give us a broader picture and an understanding of where the price could actually be going in the future. Okay, so looking at the DXY, we can see the DXY is holding support here. Okay, support from this previous low all the way back here. Now, if this support is going to be held, okay, then there is a very high chance that we're going to see Bitcoin have a pullback, okay, and we're potentially going to see Bitcoin maybe even form a lower low that it formed, all the way back when it formed the low of the bear market, which was around 15,500, depending on the exchange, but around $15,000. And if we're going to see the DXY bounce from here, come and test this resistance, that is not going to be good for crypto or the traditional markets at all. Okay, what we would like to see for these pumps to continue is that the DXY breaks this support right here and continues towards the downside. Okay, we want to see that DXY break towards the downside. If we don't see that and we see it hold support, then we're most likely going to see Bitcoin crash, and same goes with the traditional market as well. So we want to see the DXY break this. If it holds the support and comes up to this resistance here, that is not going to be good. And then if it breaks this resistance here, then we're looking at the price potentially coming up to this next resistance level up here, which will be very, very bad for the traditional markets and the crypto markets as well. So we've got to be very aware of that. And this is something that I'm keeping a very, very close eye on at the moment. What else are we looking at as well? We're looking at the traditional markets. Okay, this is the ES, which is the S&P 500 E-mini futures. Okay, what has happened? Well, we've broken above the downwards trending resistance level right here. Okay, as you can see, we have broken above it. Volume wasn't the best. Okay, we would like to see a nice big spike in volume, but we haven't seen that. But there are still resistance levels above us, which I will talk about in a minute. But it's good that we've got above this downwards trending resistance level, because over the course of 2022, we did not actually break above this. As you can see here, right? 1, 2, 3, okay, 4, 5, okay, and then in 2023, 6. Okay, we tested this downwards trending resistance level, okay, 6 times before we could break it. Okay, and this is over the course of 2022 and then the start of 2023. Okay, so it's a really good thing that we've broken above this. Okay, because we haven't been above this downwards trending resistance level in a very, very long time. However, we have lots of resistance above us that we need to break to continue this rally towards the upside. Okay, one of them being this horizontal level here at $4,091. As you can see, resistance right there, resistance there. Yes, there was a fake out right here. Okay, but after the breakout, support right there, support after the breakout here, and resistance there as well. So as you can see, it's been a very well-respected level, but it's not the strongest level of resistance. What I would actually be looking at as the stronger resistance level would be this resistance level right here. Okay, this purple box with the red outline here. Okay, what we can see, resistance here, resistance here, resistance here after the break back down. Okay, slight fake out here, But again, okay, we were getting rejected from that downwards trending resistance level there. Okay, resistance before the breakup, resistance here. Okay, support after the breakdown, support here as well. Resistance, resistance, support, support here. Okay, so this has been a very, very critical level for the ES. Okay, now this is a level that we need to break above to continue this rally towards the upside. If we cannot break above this resistance here, then we're most likely going to see a rejection, and then we're going to see that feed into the crypto market as well, where Bitcoin is going to have rejections from its resistance levels as well, and we're going to continue this downwards price action that we're seeing on the broader scale. Okay, as in, yes, we've had the nice pump recently, but continue this downwards price action that we've been looking at on the weekly chart right here. Okay, we've got a major resistance just above us here. Okay, so we just need to understand where the market is right now. Where I am sitting is that the market is sat more around this area right here. Okay, let me just zoom in so you can see it a bit clearer. Okay, I feel that the market is leaving this anger phase right here. Okay, and we're going to start leading into this depression phase where the price actually moves lower. Now, yes, I could be wrong. Okay, we could actually be leaving that depression phase and coming into that disbelief phase. But for me, with everything that's going on, with recession looming, okay, with the Fed still increasing the rates, okay, it's not looking good. Okay, it's not looking good for the traditional markets, which is leading into the crypto markets. Crypto is very correlated to the traditional markets. We do just have to be aware of that. So where I'm sitting right now is more that we're leaving this anger phase, starting to go into that depression phase. So we do need to be very, very aware of that. And what we see here is that what tends to happen in this anger phase, okay, we have this high that we form here, we form a lower high, okay, then we come up and form a lower low, okay, right here, and then we come into that depression phase, and then we form another lower low there, okay, and that is sort of what we're looking at right now. Okay, so we formed this high right here. Okay, we formed this high, we've had that capitulation. Okay, we formed the low, we formed the high. Okay, we formed a lower low right here. Okay, so we formed a low here, another lower low. Okay, this is looking very similar to this. Okay, this anger phase, we've had a low, then a lower low. Okay, and there's that high as well, and it looks as though we could be actually forming this lower high, which could lead us into that depression phase. Yeah, okay, so this is what I'm looking at here. Okay, we have this high right here, and then it looks as though we could be forming a lower low here. A lower high, not a lower low, a lower high right here, which could potentially lead us into that depression phase where we potentially come down to those targets of 12,000, 10,000, 11,000, whatever. Yeah, so we've got to be very aware of that. The market's still looking very bearish, looking on a fundamental side of things. As I said, recession looming. Okay, interest rates are still increasing. Sorry. Yes, they are decreasing the amount they're increasing by, but they are still initially increasing, which is bad. So we got to be very aware of that. So for me right now, I'm sitting more on the story that we're leaving the anger phase, going into that depression phase. However, we could have already had that depression phase, and we're leading into that disbelief phase. But right now, I'm more sat that we're leaving the anger phase, coming into that depression phase. We're still looking very bearish on the fundamental side of things, and even sort of on the technical side of things as well. Yes, we've broken above this here. Okay, we've broken above this. Okay, this is what we needed to get above. Okay, to see this push towards the upside. Otherwise, we were going straight down to 12,000. Okay, but now we're above it is good. But for me, we need to get above 25,000, use that as support, and then continue that rally towards the upside to be happy that we have left that depression phase, and we are now in that disbelief phase. Okay, so we've got to be very, very aware, and we've got to keep our eye out on what happens to the market when the Fed release the interest rate decision as well. If we're going to see a little pump and then a dump, this is really, really not good. Okay, because we're going to continue to see this over the course of the FOMC meetings. Every time they have an FOMC meeting, we could potentially see it. And when are the next ones? Okay, the next ones are in March. Okay, we've got one in May. Okay, we've got one in June, July, September, November, December. Okay, so we could be increasing. Okay, the Fed could decide to increase by 25 basis points over the course of the year. Okay, what we could see is a small pump coming into it and then a dump afterwards. Okay, so we've got to be very aware of that as well. Let's see, Pat Murray, just quickly, what's after the disbelief phase? Okay, then you go into the hope, then you just start the whole thing again. It goes into hope, optimism, belief, thrill, utopia, and then the whole thing plays out again. We have that bear market. Okay, so after the disbelief phase, it just goes back into hope, up to optimism, belief, thrill, and so on and so on. So that's what happens. Joe Watt, forever up. Yeah, hopefully it goes up forever. Daily is worse with RSI. Let's bring up the daily. Yeah. Prime example right here. Okay, we're forming a massive bearish divergence here. Price action towards the upside here. RSI is very overextended, forming a bearish divergence as well. Okay, this is another signal that a pullback is needed. Okay, and this pullback, it could take us back down, okay, to let's say 19,000, and then we could bounce from there. Okay, that's a viable option. But the option that I see is that if we have this major pullback, we could possibly break the support and continue towards the downside, like I was saying, coming into this depression phase. So we just need to be aware of that and see how the market reacts to the FOMC meeting as well. Welcome back. Hope you had a good vacation. Thank you very much. We need a pullback. Yeah, we do need a pullback. Even if we're going to continue this rally towards the upside, I'm not saying that we're going to have a major pullback and then we're going to have a crash. I'm just saying that we need a pullback to continue this push towards the upside. However, there is a possibility that the pullback could lead into an even bigger pullback as well. So we've got to be aware of that. The market's still looking very bearish. Okay, DXY. Starting off with the ES hasn't broken this level here around $4,200. I would like the ES to break that, use it support, continue towards the upside to be happy that we're moving into this disbelief phase. Okay, we're starting this bull run, but we've not done that yet. And the DXY as well. I'd like to see the DXY break this major support level here. If we can break that, then we can continue this rally towards the upside. But if we're going to continue to hold this support level and we're going to bounce off this support level, then it's going to be bad for the traditional markets and the crypto markets as well. So looking at this DXY very, very closely, we need to break this support here. If we can break it, we can go higher on the traditional and the crypto markets. But if we're going to hold the support and we're going to move higher on the DXY, then we're most likely going to have another leg down for the traditional market and the crypto market as well. Did the S&P 500 index break the trend line in your eyes? Okay. It's very clearly, let's go back to it. It's very clearly broken the trend line. Yes. Volume there, no. Okay. But, we still got these two resistance levels here that we need to break above for me to be happy that this bull run could actually be here. Okay, and right now we're getting rejected from this first horizontal level here at 4,091, and even if we break that, we still need to break $4,200 approximately for me to be happy that the bull market has finally started. And again, as I said, DXY needs to break support as well. Massive almighty dump coming. This is what I'm sort of leading towards as well. Yes, we're having a really nice push towards the upside, but looking at the fundamentals, looking at technicals as well, we're forming these bearish divergences. We've got the Fed increasing the rates still, okay, and we've got the recession looming over our head as well. Very, very bearish signs. 60K by the end of Feb. Stop fudding and muddling. 60K by the end of Feb. Okay, I think you're joking there. I do think you're joking. But yeah, I think that's pretty much. Well, let's have a look. Let's have a look at Ethereum quickly, actually. Let's. Sounds like you might be in disbelief, AJ. Yeah, I could be. I could be in disbelief. But again, looking at the fundamentals, recession looming. If we're going to be going into a recession, okay, then, we're going to see the traditional markets crash. And that it's going to feed into the crypto market as well, which is not good. I want to show you just one more time, okay? The 10-year yield is lower than the 2-year yield, okay? Every time this has happened in the past, it's led into a recession. Okay, every time the 2-year exceeds the 10-year, okay, orange line goes below the black line here. Okay, then recession is shown by these grey boxes here. Okay, every time we've had the 2-year exceed the 10-year, we've gone into a recession. Okay, and we're looking at this now. Yes, that chart's outdated. That's 2018, but right now the orange line is somewhere down here. Okay, in 2023 it's somewhere down here and we know that because the 2-year is 4.251% and the 3-year is 3.553%. Every time this has happened, it's led into a recession. If we're going into a recession, we're going into that depression phase. Okay, so we've got to be very, very aware of that as well. Oh no, I was exaggerating a little bit there. 25K first. Yeah, we need to break above that 25K to start even thinking about 30K, 40K. We just need to break above that. Okay, once we can break above that and hold that as support, then we can be talking about 30K. Okay, but if we break it and we can't use 25K as support, then that's bad because 25K is actually a major level shown by this chart right here. Okay, we've had a previous high here, 25K. If we can get above it, use it as support, then we can start talking about 30K. However, if we're going to come above 25K, okay, and have some sort of fake out, we're going to go lower. So we've got to be aware of that as well. We are and have been in a recession, though. Yeah, it's not been confirmed. So, we've not been confirmed that we're in a recession. We could be in a recession right now. We could have already been in a recession, but yeah, we may not have even entered the recession yet as well. What should we expect for Bitcoin, to go up or to go down? For me personally, I would be expecting it to go down. We need this pullback. We're forming these bearish divergences. RSI indicators are very overextended. Price is increasing, volume is decreasing, shown by this these volume bars here. I'm still swaying more towards the prices looking very bearish. Yes, we've had these nice pumps towards the upside, but I've been saying that, I've been saying if we can break above these resistances, yes, we're going to go to the next levels, but we just got to be aware that we're forming these very, very bearish signs. And then on the larger scale as well, okay, we have recession potentially looming over our heads, and then the Fed still increasing the rates as well. So got to be very, very aware of that. Right now, just waiting for the price of Bitcoin to potentially come and test this support here. If it tests this support, okay, then I'm going to be looking at potentially entering a long position. And of course, if I do enter that long position there, I'll be looking to potentially take profit at the high, okay, at the resistance here. But if we do break below this here, then I would be looking for a potential short if I see any shorting opportunities. But of course, if I enter any sort of trade, you will be the first people to know about it, and I will come live for you if I enter any trade. So if that sounds interesting to you, please make sure you smash a like on this video. I would really, really appreciate it. It really helps me out, really helps the channel out. And yeah, I really, really hope you enjoyed this video, and I will see you potentially later on if I enter a trade. If not, I will see you tomorrow. Remember, we're back to normal now. So, between 12 and 1 o'clock is when I will normally be going live. So once again, thank you very much for watching. Smash that like button, and I will see you in the next live stream. Smash that subscribe button, turn that bell notification on so you never miss a live stream. Thank you very much.